My name's Dr. Hubert Danso. I'm the CEO and Chairman of Africa Investor, an institutional infrastructure investment group focused on Africa. I also chair the African Union's institutional investor group called the Continental Business Network, as well as the African Green Infrastructure Investment Bank. I also chair the CFA New York Society's Global Asset Owners Council.
Fantastic. So what are some of the barriers to mobilizing private sector finance for climate and green growth in Africa?
Well, I would first start off by saying Africa represents one of the generational investment opportunities of our time. But we really do need to get to scale, and there are some barriers that are right in front of us that we need to be able to address. I think one of the barriers is the under public investment in creating the conditions to develop bankable, investable project pipelines at scale. Another barrier is that there's been too much dependence on multilateral development banks to deliver private capital mobilization at scale. I mean, they're a collective $1.5 trillion balance sheet. And to really get to Africa's $3 trillion of climate investment needs, we need a full partnership with the global $150 to $200 trillion pool of institutional assets. I think that really needs to be a priority. I think another key barrier has really been the lack of value that we add to our critical minerals, and therefore we've had a low level of green industrialization, and therefore have been slightly disintermediated with the $10 trillion per annum and growing global green industrial economy. And of course, we've been therefore exporting a lot of our value. Also, another barrier, as well as an opportunity, is the legal and regulatory frameworks. They are really critical in terms of being able to mobilize private capital at scale. Currently, we have the PPP framework, which in our view is not fit for the future needs of mobilizing private capital at scale. So we've actually developed and launched last year quite a novel institutional investor public partnership framework, which is specifically designed by and for asset owners to be able to mobilize private capital at scale and deploy that private capital at speed for green infrastructure in Africa. I would also add another really important thing is the addressing the perception of risk. Of course, if you don't have a clear view on the risk, you're always going to presume that it's higher than it actually is. So we believe that getting access to data, particularly the GEMS database, the Global Emerging Markets database, help us decide the difference between perceived risk versus actual risk is going to be a really critical and important asset for us. And then I think another key barrier has been, and this is the last point I'll make on this particular point, is that I think we have failed to develop at scale platforms for long-term capital to come in at scale for climate investment. And we're now fortunate enough to have the African Green Infrastructure Investment Bank, which is a consortium of African pension and sovereign wealth funds and global peer partners with a particular focus to originate and invest in African green infrastructure investments and to make investing in Africa at scale the expectation and not the exception. And our mission as the African Green Infrastructure Investment Bank is to be green and profitable, not green or profitable.
I think that's fantastic. And thank you so much again. If you'd like to talk a little bit about maybe some strategies or policies that could stimulate economic growth in African countries and help to close the climate financing gap.
Yes, closing the climate financing gap is absolutely a critical issue, but we actually call it the climate investment gap. So we already know that there's about $3 trillion of nationally determined contribution, which is the sort of the UN classification for climate investment projects. Our sort of continental investment opportunity set is about $3 trillion required between now and 2030. But to put that in context, we effectively have less than 7 years to mobilize this amount of capital, which is more than the world was able to mobilize for renewable energy investment in the last 20 years. I think that was about 2.8 trillion from the year 2000 to the year 2020. What does that mean? That means that we really need new paradigms. And as I sort of mentioned earlier, principally, we need to make development investable rather than make investment developmental. And that way we have a better access to a much larger pool of our $150 to $200 trillion worth of assets. In terms of the policy messages and frameworks, we've had a really big leap forward this year at the Africa Climate Summit, hosted by the African Union, where we inaugurated and launched the Nairobi Declaration, which to us as investors is essentially more important than the Paris Agreement was globally to the private sector, because it sends a very clear market signal to us as investors that the governments will work with us very closely to establish green infrastructure, African green infrastructure, as a globally competitive investable asset class, and create a framework to build Africa's version of the Inflation Reduction Act or Europe's version of the Net Zero Industry Act. And I think another key signal in terms of that's a really positive takeaway is that we're moving away from the MDB blended debt financing model to one that is much more about a blended investment model, more equity rather than debt-driven institutional investor public partnerships. I think another key policy move and another key strategic institutional investor public partnership is that the continent is pursuing green industrial cities as a strategy, which is based on investable energy corridors to fuel the regional as well as the global green industrial economy, to be able to access global offtakes for our critical minerals, really taking advantage of being able to decarbonize manufacturing. And this represents a really good opportunity for us as investors, because instead of just investing in the extractive position, which, for example, I'll give you an example, the electric vehicle manufacturing industry. If we just focused on some of the value proposition around the extractive component, that could represent about a $9 billion investment opportunity in terms of market sort of size. But then when we add value to that exact same endowment, by processing it, the value then, increases to about 40 to 50 billion. If you then go the next step and start investing in the EV value chain related infrastructure, you've actually created a $7 trillion investment market opportunity. And that's the opportunities that we see, that we have plenty of those across the continent if we can work strategically through these particular green industrial cities. I think another key issue and a really transformative policy is the introduction of the concept of a priority investor status, which is essentially extending to investors, to climate investors in particular, a very similar dispensation to what the MDBs receive under the current heading of the preferred creditor status. This will actually give governments as well as our pools of capital almost priority status in the same way that MDBs get preferred creditor status, opening up, de-risking our participation quite considerably. And I think lastly, just in terms of some of the a priority policy that could be particularly interesting is the provision of tax incentives for platforms like the African Green Infrastructure Investment Bank to invest in green and climate related infrastructure projects, particularly the nationally determined contribution related projects.
Thanks for sharing your thoughts on that. That was, it was very interesting to hear about. In light of COP28 coming up in November in Egypt this year, what are some of the green infrastructure objectives you're looking at?
Yes, I think COP28 is going to be a really important COP. I think is coming during a year that we've just had the Sustainable Development Goals review. We've had the new Financial Pact Summit hosted by President Macron. And this particular COP is no ordinary COP because it's the COP that is focused on a global stock take of where we are and where we need to go. So I think for us, what we're hoping to see and what we're pushing to see, particularly in terms of investment in green infrastructure, is that there's going to be a reset on the private capital mobilization market failure, which is currently sort of led by the public sector. And we believe that should absolutely be led by the institutional market, by the private sector. We believe that if you want to mobilize public capital at scale, you shouldn't ask the private sector to lead lead that effort. And conversely, if you want to mobilize private capital at scale, you shouldn't expect the public sector to do a better job at that than the private sector. So private sector leadership on pipeline development, especially on NDC projects, we think is a critical opportunity that COP28 can foster. I think, as I've talked about green industrialization, we want to see technology investment partnerships and a strategic consensus on aligning global offtakes for green technologies, especially from African green industrial cities. And again, those are very similar to what have recently been launched by the US government called green hydrogen hubs, really attractive for the private sector and very investable environments. I think we would also like to see, ultimately COP28 foster climate investment statesmanship. And that is really bringing heads of state sitting around the table with us as institutional investors to really address this private capital mobilization MDB market failure. And I call it a market failure because, in Africa's context, for example, as we have to mobilize $3 trillion within a 7-year frame to even have a chance at the 1.5 degree, objective. Emerging markets more broadly, that number is about 23 trillion. So as I mentioned earlier, multilateral development banks are, at the lead of the private capital mobilization agenda. Their undertaking, their mandates are to deliver for every $1 of MDB finance that they provide, they're supposed to be able to deliver $10 of private capital. When the actual results of that, according to the G20, is for every $1 that they provide, they've only been able to provide and deliver 20 cents to 38 cents of private capital. So we absolutely need COP28 to get in front of that. And we are asking for COP28 to inaugurate a platform for a coalition of heads of state to work with long-term institutional investors, pension funds, sovereign wealth funds, insurance companies, to really help us develop investment earthshots together, like the Inflation Reduction Act. And I mean, if you look at the Inflation Reduction Act, that has $500 billion worth of commitments for climate investments in the last 12 months, which is essentially more than 10 times the foreign direct investment that Africa has accomplished in a decade. So that's what we really want COP28 to deliver, this coalition of heads of state working with long-term institutional investors to really transform Africa's prospects and competitiveness to get access to the global green industrial economy and to be able to deliver market-appropriate and competitive returns for us as institutional investors.